All right, guys, bang, bang. I've got Sam here with us. Thanks so much for doing this, man.
Yeah, thanks for having me.
Absolutely. All right. So I think that you are one of the most fascinating people in all of crypto, and many people don't know your story. So let's just start with kind of where you grew up, where you went to school, and then how you got into crypto.
Yeah, I grew up in the San Francisco Bay Area, on a Stanford campus, and had a really nice sort of quiet, suburban upbringing, so to speak. And yeah, it served a good early life. Parents are both law professors, and sort of thought maybe I was going to do math or physics, or I don't know. It wasn't the plans were sort of very non-specific. Sort of like select whichever subject I was doing best at in school, and like that's what I'm going to do. Um, and so I went to MIT, and I quickly learned there I wasn't going to be a physicist. I was like the sort of least favorite things that I'd done were try and do physics research. So that's that wasn't going to be the answer. Um, but that doesn't sort of answer the question of what the answer will be. What I will do, and I spent some time in college trying to think about what I could do that sort of have the most impact, and ended up at thinking about how I could donate, as much as I could, and that sort of led me to quant finance. Um, so I was a trader at Jane Street Capital for about 3 years in New York, which is a blast. And I really had fun there. It was really, really nice. And then, sort of after 3 years or so, I had sort of a fork in the path of like, am I going to sort of do this for the rest of my life, or am I going to try and do other stuff? And it was a tough call. I really liked it. But sort of felt like I wanted to explore. I wanted to try other things. I wanted to see what, that maybe there is huge upside to doing other things too. And so that sort of, I left, and shortly thereafter, sort of checked out crypto markets, which is late 2017. And markets were completely insane then. And the arbitrages were just gigantic, and that's sort of my background. And so that's sort of how I ended up in crypto.
All right. So when you're in school, obviously you're smart. You got a bunch of smart classmates. Everyone is kind of going into all these different things. The kind of classic tale is people gravitate towards Wall Street because that's where you can make the most money. But I
Yep.
think one of the most interesting parts about your story is this idea of how do I make as much money to give it all away? So maybe let's just start with
Yeah.
kind of where did that idea come from, and kind of how did you formulate a strategy to go do this?
Yeah. So, it's sort of like a wandering path to get there. Started with, what can I do that'll have impact? Went through a bunch of random things. I, got into animal welfare, thought about global poverty and stuff. Ultimately, met a group of people who were thinking about similar things, the Effective Altruism Community, sometime around my junior year, or sophomore year, I guess, of college. And they sort of said, like, suggested, like, hey, if this is what you're thinking, like, obviously there are a lot of things you can do, but one thing you should ask is, like, if there's some charity you think is cool, like, would they rather have, you working for them, or you donating money to them? Like, and obviously, again, for different people, it's different, but like, it's sort of given my background, it sort of seemed like, well, actually, like, quantitative skills are a pretty good fit uh, for at least what nowadays is often lucrative careers. Um, and I had some friends who had interned at Jane Street, said good things about it, and so I just sort of decided, I don't know, let's try and try interviewing, see how it is, see if it seems like a good fit, and sort of really like the interview. And it wasn't so much I like calculated out every path and was like, this is the highest DP, which, to be clear, maybe I should have done. But I didn't. Instead, I was sort of like, oh wow, I had no idea what I was doing, and now all of a sudden this seems like really high value. Like, it seems like I could potentially donate a lot of money this way, and that seems great.
Got it. And so that's a very unique way of viewing the world, right? Kind of talk through how you think about it from you obviously need money to live. right?
Yep.
There's a story recently. There was I think, a multi-billionaire who basically had amassed a fortune of like $8 billion, and he has
Yep.
now successfully given it all away. He literally lives in like a kind of shoebox San Francisco apartment. Says that he's incredibly happy, and his entire life goal was to give away his fortune, and he's now done that. But he amassed the
Yeah.
fortune and then gave it away. Are
Yep.
you kind of, as you're making money, giving it away, or is this a let's get as much money as possible
Right.
and give it away?
It's a good question. And I sort of think if you can do it, the ideal thing in some ways, there's a lot of active debate about this, is sort of the actual answer. And here are sort of two ways to think about it, right? One is like, well, if you amass money, you can grow that money, and like then you can give away way more than if you'd been giving away the whole time because, you get interest on that money one way or another. The other way of thinking about it is, sure, well, also the charities could have been doing things with that in the meantime. And, they could have been saving people's lives who have been contributing to the world. And like, doesn't that have some compounding effects too? And sort of the answer is, yeah, actually, most things that are really high impact have compounding effects. The compounding is sort of part of what makes them high impact. And you have to sort of think about which is bigger. And so I think, part of how I think about it is like, given where I am right now, what's sort of relatively larger. And I mean, I think for people who are in crypto right now, it's not going to shock them to hear that like returns on capital can be pretty significant. And I think that you just have to look at like what's happened in DeFi over the last 4 months to see that like that's going to outstrip a lot of things. And so part of my answer is like, well, if you think you have unusually good ways to grow money, which you probably do if you're in the business of growing money, then that's like a decent argument towards sort of growing it over time and then donating it. On the other hand, and a lot of people would say this, and I think they have a real point. Like, yeah, sure, I've heard that one before. Like person says, oh yeah, don't worry. Like this is, I'm one of the good guys. Um, and I think that's like, that's a real worry that you can have about other people, and it's a worry you can have about yourself, even if you're not, even if you're not selfish. It's a sort of drifting away, forgetting about why you got there in the first place. And so what I actually do, and I'm not saying this is a perfect thing, like there's things pulling in all directions here, but I sort of give away enough each year that it's sort of a real amount, that's a significant amount, and that it sort of keeps me honest, and keeps me sort of keeps me keeps reminding me of like why I did this in the first place, keeps me in touch with people who are thinking about it, keeps me in the loop about things keeps me thinking about what I can do with money. And so even if it's not like most of my money each year, even if a lot of it is the goal is to compound it and give it later, there's a lot of good that I think there's a lot of good you can do now, and I think that there's a lot of value to at least giving something away to keep yourself honest.
Absolutely. And so let's talk about what you've done to grow wealth, right? So you've got kind of two separate things. You've got FTX and then you've got Alameda Research.
Yep.
Jane Street is a pretty legit shop, right?
Yep.
That's a pretty good job. When you decided to leave, did you know that you were going to go into crypto, or was this more of you left and then as you were exploring things to do, crypto kind of caught your eye?
Yeah, like when I left, there were like 12 things. I sort of didn't know exactly what I was going to do. And actually, I was like going to try working at a charity. It was one of the things at an effective altruist charity. And I think that like sort of there are all these paths and they're so hard to think about, right? Like, here's one thing that like, and there's so many things you think about and you're like, oh boy, who the hell knows how valuable that is, Like you go campaign for policies that you think are good or for politicians who you think will implement them. Or you could go work on climate change. You could go work on third world developing diseases. Some of these turn out to be somewhat analyzable. Like you can look at sort of a classic example is like how many lives per dollar can you save donating to third world health charities? And you can actually ballpark that, right? You can just do trials, right? You can go into a village, you can give malaria treated bed nets, and see what happens to the malaria rates. And there's a lot of complications, but like that's sort of an analyzable thing, but many of these things are really hard to ballpark. If you're going to, like, how much impact can you have on the world as a journalist? The answer has to be a lot. Like, clearly they have impact on the world, but it's really hard to think about how much and what the right thing to do is. So, sort of my thought was like, boy, there are all these things I want to try doing. Some of them I can sort of think about. Some of them I have a lot of trouble estimating, and it's just going to be hard to know how big they could get until I try. And so that was sort of the thought, was try a bunch of things and like see what sticks.
Got it. And so when you eventually discover crypto, was it literally just the arbitrage opportunity was just so big that like it was hitting you over the head and saying you have to go do this, or was there other things that that kind of dragged you in?
Yeah, I mean, that was the first thing that dragged me in, was just, looking at literally, I like literally just looked at coin market cap, and I clicked on Bitcoin and I saw these numbers, like those aren't the same numbers, like I see a list of exchanges and prices, and the prices are different. And like, and that's not like complicated arbitrage, or so I thought. I was like, literally that, like nothing that simple ever happens, you know, but the numbers, they weren't even a little bit different, they're like 5-10% different. And so sort of my first thought was like, that's fake. Like, I don't know why yet, but that's fake. That can't be real. And then I sort of investigated, and the answer is half of it was fake. But half those exchanges were not real, but half them actually were, and there were some real arbitrages sprinkled in with the fake ones. And the real challenge back in 2017 was not finding a good trade; it was being able to do it. And the operational setup involved in it was just massive.
Okay, explain this, because I think a lot of people don't understand when we're
Yeah,
talking about like super simple
right.
arbitrage is basically just you go to one exchange, you buy Bitcoin, you move it onto another exchange, you sell it. There's literally two
Exactly.
different prices, and you take the difference. But
Exactly. This isn't some weird derivative. You're not thinking about interest rate. Literally, it's a Coinbase and Bitstamp have different prices for Bitcoin, right? Like that shouldn't be too hard. So what happens? I'll explain maybe one of the more complicated, simple arbitrages. Um, and because I think it sort of rolls into one all the different things you have to think about. And this is uh, the Japan arb. So I was late 2017, early 2018. Japanese bitcoins are just trading like 5 to 15% higher than American bitcoins. Meaning, you go on Bitflyer or CoinChecker, uh, Bitbank, or one of the Japanese exchanges, and it's an $11,000 Bitcoin, and you go on Coinbase and it's a $10,000 Bitcoin. And so it's sort of like, there's an arbitrage, and that one was big. There's $1 billion a day trading on each side. So if you could do it, it sort of seemed like maybe you could do it big, which is pretty exciting, because it's also like 10% a day. I don't know, is a lot, you know. So then you try and do it, and you fail for 12 reasons, and like so many reasons. It's so overdetermined. So what happens? Well, first of all, you realize you don't have a Coinbase account, and there's a 3-month waiting list. Um, you realize you don't have a Bitflyer account, and you have to be Japanese to get one, and there's a 3-month waiting list. You get those, then you wire $100 as a test transfer to your Coinbase account, and your bank shuts down your bank account because they don't like crypto. Then you realize that you can only withdraw to a Japanese bank account from Bitflyer, and you need to be Japanese to have a Japanese bank account. So okay, you get a new bank account, and you find a Japanese person or company or something. Now you have a Japanese bank account. Then you realize you have $3,000 a day withdrawal limits on Coinbase, and again, there's a 3-month waiting list to get your withdrawal limits raised. Then you realize that uh, your Japanese bank account can't do international wire transfers, so it's not clear how you're getting the money out of Japan. And it's just like you go through so many things here, and thing after thing after thing is like, I guess I have to learn how to start a company in a foreign country and hire people there and get a bank account and lawyer, and then you go to do a wire transfer in Japan. You realize you don't speak Japanese, and that's going to be a problem because their website doesn't. There are no online. There weren't. You couldn't do it online. You had to go. Okay. Also, I'm not in Japan, and I don't speak Japanese, but I have to do it in person in a branch of a Japanese bank. So there are two more problems they have to solve somehow. And you finally get someone there, and the banker is like, "What the fuck is this? Like, this is definitely money laundering." You're like, "No, no, no, it's not. It's arbitrage." They're like, "No, no, you don't understand. You're wiring millions of dollars every day from crypto to an overseas bank account in a different name. Like, this is like that's the sketchiest thing you can be doing. And it's always in the same direction. It's not like you're moving it back. It's just only going one way." And you're like, "No, you don't understand. On the back end, I got Bitcoins going from GDAX to Bitflyer." And they're like, "I didn't understand any of that, but this checks all the boxes of a sketchy transaction." And also remember, you don't speak Japanese and they don't speak English. And so now you go hire Japanese lawyers, not to like, not to like for a court case or something. You hire them to go talk to a banker because like they're like a trustworthy person who speak the language. So it's just like it was months and months of setup that went into like all of these different pieces. And the problem is, if you have all but one, you have nothing. right? What you end up with a ton of Japanese yen pooled in a bank account in Japan that you can't do anything with. And it's not like you're cycling and arbitraging every day; it's just sitting there. So it's like you need to put 12 pieces together to do a single round of arbitrage. So that's sort of the problem that you've run into is just like you know uh, it's crypto is incredibly logistically complicated because it's decentralized. And like you think about, well, how about normal finance? What happens? The answer is all U.S. exchanges clear under the same clearing symbol with a centralized clearinghouse. You store everything with a centralized custodian um, or clearing firm who also stores all your money and has connected to all the exchanges for you and can do foreign currency transactions and everything. Like just it's all in one place, you know. But in crypto, because of decentralization, one of the sort of side effects of this is that if you have to do something that touches a lot of different companies, you have to separately figure out logistics for every single one.
And so as you're doing this, the name of the company is really interesting to me. So Alameda Research, the research
Yeah,
component is not what I think most people would expect a
no,
basically trading shop. And so tell the story. Alameda, I've heard where that comes from. So explain that one because that's just
right.
cool. And then the research,
Yep.
what was the logic there?
Yeah. So Alameda, started out in Berkeley, California, which is in Alameda County. So that's where Alameda comes from. Research. Um, 10% if it came from the fact that there is some research there. There's like you run studies, and like one example of this would be you want to figure out arbitrages are simple when I describe them the way I describe them, at least to think about. But let's say that you're in the middle of a market move. It's like a 2 second long market move, and every exchange is reporting a different Bitcoin price. And you want to figure out if there's a trade to do, but all the exchanges' data is lagging. So you don't know if it's really an arbitrage or if this is just like one exchange is pre move and one is post move. But you can't actually trade on the pre move one because it's post move now. Um, and you might have to do a lot of statistical studies and a lot of data analysis. To try and figure out what's actually going on there. So there is some research in it, but that's not really where the name came from. Really, where the name come from? Well, we're trying to think of a name for the company, and we're not good at naming things. I mean, it's just like a weakness of I'm not good at it. I don't like, but we needed a name. Like we're sort of like at some point our corporate development is blocked on having a name. And what were the criteria? Um, the criteria were not like, Bitcoin arbitrage trading shop. What variant on that should we use? We sort of took a step back and we're like, all right, we want a bank account. And if we're Bitcoin arbitrage trading shop founded by a bunch of 20-year-olds, if that's the name of our company, we're not getting our bank account. Like the compliance department's going to take one look at that and just like that's it. Right. And so we're like, all right, what name is never going to give us grief? What name is not going to stop us from being able to do anything like research? No one doesn't like research. No one's like, I don't know, research. I don't know if we can deal with that. That's where it came from. It's a completely inoffensive name.
That is an amazing story. So, give us an overview of kind of what you guys are doing today, right? So, you guys are based in Hong Kong, I believe, and
Yep.
kind of what exactly does Alameda Research entail?
Yeah. It's I the core way to think about it is it's a liquidity provider. And what does that mean? A crypto liquidity provider. What does that mean? Well, one of the things it means is like, if is it does arbitrage. And what's the connection between those? Well, if there's buyers on Bitstamp and sellers on Coinbase of Bitcoin, then you provide liquidity to the sellers on Coinbase by putting out bids. You provide liquidity to the buyers on Bitstamp by putting out offers. You make money by doing arbitrage, and you help tighten spreads and you help keep things in line and provide actual coins for people to buy and dollars for people to sell into. So that's sort of like the classic, simple like liquidity providing via arbitrage connection. Um, and that's a lot of what Alameda does. But increasingly, as crypto branches out, it does too into all the wacky ways that crypto demands liquidity. And so, then you get to futures and derivatives, right? Like providing liquidity on futures. If you want to go trade on, let's say that you want to go, I don't know, pick your favorite exchange with futures, right? You want to go to Binance or Huobi or BitMEX or whatever, and you want to buy a Bitcoin future. Someone has to be on there on the other side, sort of keeping it at about the price of a Bitcoin. And so that's sort of another thing is like, futures versus spot arbitrage. Um, But then there's sort of, there's fiat arbitrage, right? So keeping Japanese and US exchanges in line with each other is sort of another branch of this. And recently, I mean, what's the thing that crypto sort of needed liquidity provided to in the last few months? Well, it's DeFi. That's where all the activity is, and so it's like providing liquidity in all the wacky ways that you can buy or sell comp, like it's not just like Binance to Coinbase liquidity. There's also like, you know, Uniswap and all the borrow lending protocols that have it, and OTC, and then there's like yield farming, and so basically wherever there's trading activity in crypto, um, there's sort of a place to provide liquidity and there's a place to make money by doing arbitrage if there's sort of enough demand and not enough supply. And so, what Alameda is sort of spending its time on varies from month to month, depending on what crypto is spending its time thinking about.
Got it. And then where does FTX come in?
Yeah. So, Alameda had been going for about a year. This is like late 2018. And I mean, something that had been clear from the beginning was that exchanges make a lot of money in crypto. Seemed like a good business to be in. The product, there's a lot of complications on the outside. But if you think about the really core product of like a matching engine, that is not that complicated. Like that is sort of like, well, you can place a bid and you can place an offer. And if they cross, then you match them. That's like, and so it's sort of like, okay, like we can do that. That's not that hard. That's a lot easier than the bots we're building. And they seem to be doing quite well. But the problem is that a lot of other people can do that too and have done that. And we don't know any customers. We don't have a network. We don't so yeah, we could launch yet another Bitcoin Tether exchange and hope people used it and no one would. That's sort of like where we were for a while and where we were stuck on. And what sort of finally got it out of that rut to some extent was a few things happening at once. So I moved to Hong Kong and I had a lot of meetings with people here. Alameda built out an OTC desk and I built out a network in crypto from that. So all of a sudden we had some institutional connections, had some personal connections. And then the other thing was all the derivatives exchanges sort of shit the bed at the same time. And it's sort of like, there's the overload problems. There are massive clawbacks everywhere. It's like hundreds of millions of dollars a year being lost to this. And so it's sort of like, okay, like a derivatives exchange is harder. There's more that goes into it. There's a risk engine, margin leverage. The matching engine's harder because of the risk engine. A lot of the players right now seem to be having a lot of trouble with it. There's a ton of volume going in them. And now we have a bit of a network. And that was sort of enough to make us feel like we had a plausible path forward there. And so, started building out FTX sort of late 2018, early 2019. And yeah, went live spring of 2019. And at the very beginning, it was sort of an experiment of like, we think we can build a good product. Like that we think we can do. Is that enough? Like a good product and a little bit of a network, can that become a big exchange? And the answer is no, that's not enough to become a big exchange. That fails. But if you take those and then you just like push a lot, you do a ton of work at everything from recruiting users, everything from retail customers to large institutions, to making a ton of UI changes, to doing customer support, and all the random crazy things that come up that you have to deal with. And then you just push really hard on building out a user base and network while simultaneously building out the product. Then, yeah, you can do it. And so that's sort of what we've been doing over the last year with FTX, and it's grown to roughly the 5th biggest exchange, which is pretty cool. It's still sort of derivatives first in that like the majority of its volume and sort of its like most well-known products are derivatives, but it has spot markets as well, tokenized products, fiat, and a bunch of other things.
Got it. And all of this has been self-funded, or you guys have raised capital outside? How have you built all of this?
Yeah, so Alameda was a combination of self-funding and lines of credit from like friends and family and stuff, to bootstrap. which was sort of a high wire act for a little while, but set us up really well for the future. Um, I
By the way,
FTX,
hold on a second. That's a great way to say you raised no outside capital.
that's right. Alameda has never raised any outside capital, and that's sort of important to it because anyone who has investors is aware of the pain of having investors, you know, and I. It's just even if they're the best investors in the world, there's a pain associated with it, you know. Um, and just to give one trivial example, let's say you want to open up a bank account for your company. You go to the bank and they're like, "Can we have a signature of all of the owners?" And you're like, "No, I am not all of the owners. Some of them are thousands of miles away." They're like, "Great, come back when you have their signatures." And that doesn't sound that bad because you email them, you're like, "Please sign this." Um, but all of a sudden, you sort of like double the work it takes to do a lot of administrative actions. And once you do that, a lot of them, like, it just slows down a bunch of things. And not having that's been really great for Alameda. FTX started out the same way, um, although there was FTT, a token sale. Um, but uh, but since then, FTX has taken outside investors, and so FTX it's still majority internally owned, but does have outside capital.
Got it. You mentioned DeFi earlier, and so I think what most people are wondering is just you have a fantastic trading business with Alameda. You've got a fantastic exchange business with FTX. Uh, Quite simply, just what the hell are you doing playing around with all this
Right.
DeFi stuff? It just kind
Yeah.
of talk through just how you see DeFi and kind of what I'll call a lot of kind of like the financial engineering and experimentation and kind of all the wackiness that's going on there in light of the
Yeah.
greater kind of crypto industry. How do you view DeFi? And then we can talk about some of the things you're doing.
Yeah. So I it I sort of stumbled into it at the beginning. And you know, a lot of where this came from was that's where the winds were blowing. That's where crypto attention was turning. And it's really important for FTX to be responsive to that. Like it's, it's 3 months earlier, everyone was asking about options and wanting us to improve our options offering. No one's asked about options in the last 3 months. Like no one cares anymore. Probably they will again in 4 months, you know? And when was the last time you heard about Deribit, right? Like probably like April. Um, that doesn't mean it's dead. It means like, in 6 months, maybe Deribit's all people are going to talk about again. Like it's sort of like, Deribit's best known for its options. And so anyway, one of what we're trying to do with FTX is uh to be offering customers sort of whatever they want, you know, when they want it as much as we can. And uh, you know, what that means is basically like, well, I it means that when the world's moving to DeFi, we try and offer DeFi products, and it's a little bit tricky. Like you could do some of that with FTX, right? Like we listed compound markets, sure. You can list DeFi tokens on the exchange, and we're sort of one of the first exchanges to start doing that, because we got a lot of interest and demand in it. But there's a problem. Like the problem is that like FTX is not DeFi. It's centralized. Like it just is. And what that meant was like anything FTX action was, that's where customers' demand was. Um, we wanted to be able to fill that, and so pivoting at FTX as much as made sense for its product. I sort of did a deeper dive in, and I basically came out with two main thoughts. The first is that a lot of the products had serious shortcomings. But the second was that there's some really cool shit there. And, some things that sort of, and first of all, I just found like the on-chain governance, the idea of that really cool and really powerful and sort of surprisingly sleek. And like, I was sort of like surprised that just worked. Now you could make it just work, although obviously theoretically you could. But second of all, I think the thing that really grew on me over time was composability. And if you ask me like what the biggest advantage of DeFi is, it's that it's composability. It's the fact that if two different people make two different products in DeFi, you can glue them together. And what that means is, like, let's say that you take a DEX and you take a borrow lending protocol. Um, so you take like Uniswap plus Compound or something like that. SushiSwap plus Alpha, or whatever you want. Like, you can, in one transaction, do a margin trade on the DEX. And the way you do it is, you sort of like get the leverage from the borrow lending protocol and the deltas from the DEX. Basically you send one thing to borrow lending protocol, use it to borrow another thing, send it back to the DEX, and buy the first thing with it. And now you've gotten levered in it. But the really cool thing about that is that you can just do it by gluing those two together, even though they're totally separate projects. And if you imagine doing that, you imagine doing that in centralized finance, you can do it, but it's a hell of a lot more annoying and harder. Like, you're ping-ponging between multiple exchanges. You have to deal with withdrawal limits and withdrawal times, liquidation on both sides, and like you sort of have to have like an automated trading system set up to be able to really do it realistically. Whereas in DeFi, you can just glue all this shit together, and that's just really cool, and it's super powerful. And it means that, like, you can have a lot of people working on a community together and all building useful things for it, and not independent things where just the best one wins. Like, things that add together. So anyway, that's sort of like what sort of struck me as like one of the most powerful things about DeFi. But also just, the products were like a little underwhelming.
And so recently you talked a little bit about kind of this like toxic DeFi environment. So kind of talk through, like, it feels like there's a lot of potential with the direction the technology is going. Then there's all kinds of craziness with like the people, the projects, the tribalism. Like, just talk through that a little bit.
Yeah, it's it's weird because it's in some sense it's a lot more cooperative than CeFi is. Like, people are all building together, but in some sense it's also a lot more toxic. And at least in places, and I don't know, there's sort of been a bunch of things that sort of combine to do that, but just sort of throwing some of them out there, like, one thing obviously is protocols. Like, there are big believers in a lot of protocols. Maxis is often the, like, I don't know if it's quite derogatory. Some people, I think, use it derogatorily. Some people use it non-derogatorily. But, Bitcoin maximalists, Ethereum maximalists, I'm sure that there's some maximalists for, pretty much every project, although, those are the two biggest communities by far. They don't get along so well. They don't get along so well with other protocols, and that's sort of independent of whether they're right. Like, they can't all be right. Like, maximalists for two different communities, it's a little hard for those to both be right, at least in the strong version of them. But maybe one could, but sort of one way or another, like, there's a lot of flaming that goes on from adherence to one community towards other communities and other projects, again, which isn't to say like one of them might be right, but one way or another, there is a lot of toxicity there. There's also yield farming is weird. It's, I don't know. I did the math and was like actually kind of surprised at like how legit some of it was. In that, like, I think there's a version of yield farming which is actually sensible, sort of, which is basically like you build a valuable product and want customers and want people to build on it and stuff. And the deal you make is you're going to hand out most of the value of it. You're just going to drop the token on its users in order to get other people to use it and incentivize to build on it. And you give them yield for that. And that vision is not crazy. And if you think that DeFi is worth tens of billions of dollars, then it could be a fair bit of value that you get out of this.
All right. So I want to take a second for you to explain exactly how this works, because I think there's a lot of people
Yeah.
who listen to this who they've heard of yield farming, like the terminology. They have
Yep.
no clue how it works. So, kind of just walk us through exactly what's happening when people are doing this.
Yeah. So first, I'll just say mechanically, there's a lot of different versions of it. I'm just gonna talk about sort of a really simplified version of it, and you can put as many knobs on it as you want. But at its heart, what is it? You build a product, and it's a product people can use. Um, maybe it's a borrow lending protocol, maybe it's a DEX, um, whatever. Let's for now say that it's a borrow lending protocol. That's where this all started. Um, and what you say is, all right, I want a lot of people to be borrowing and lending from my protocol, right? And what do I mean by borrow lending protocol? Something like Compound or Aave, where you can basically put in Ether and take out USDT or whatever. There's sort of like a bunch of accepted tokens, and you can lend some of them to the protocol, and you can borrow other coins against it. And then other people can borrow the coins you're lending out, and you're paying each other interest for this. Um, I so um, so you want to incentivize growth in your project, and you want to incentivize people to start using it, building on it, integrating with it. Um, and so what you do is you say, all right, first of all the revenue is going to go to this token. You create a token; it's the equivalent of an exchange token, a protocol token, whatever. And you say all the revenue from my project is going to this token, with Compound is comp. And what we're going to do is for the next 3 months, we're just going to every day airdrop 1,000 tokens on everyone who's using the platform, just proportionally to however much you're using it. So however much you're borrowing plus lending out, that's how many points you get, and then these thousand comp tokens just get divided evenly between all those people. And what happens then is, a lot of people go to use your protocol because they want to get your token for free. So they start borrowing or lending, and they get your token. You give up most of your tokens, or some, or a lot. I mean, depends on the project. And they get yield. And what yield means here is basically they're putting up $1,000 of capital, and every day they're getting $1 of the token airdropped. And so they're getting 10 bips a day, on their capital, just literally putting it there and lending it out. And the yield is coming in the form of the protocol token that's being airdropped on them. And the vision is now all of a sudden all these people who use borrow lending protocols have your token. They want yours to win. They want to build on yours. They're aligned with you. And they provided a value by providing liquidity to your protocol, by providing coins for people to borrow. And so all that's great and helps you out. You help them out. You're aligned. That's the theory behind it. And I'm sort of taking sort of the positive light, the optimal version of this, and ignoring all the bad shit that happens.
Okay,
But
so when people are doing this,
yep,
just to summarize, the whole idea is to incentivize users to adopt my product or my network over another one, and therefore, basically, I pay some rate of return for them adopting that, right?
that's right. Over another one, or over just doing nothing. But yeah,
Okay. The interest, I think, is or the return on some of these, I think, is where kind of, especially people who come from the traditional world, are like, wait, what is going on? Because
yeah,
the return can be 1,000%, right? Or kind of these
exactly.
crazy numbers. So kind of talk through a little bit. I'm assuming that you believe that that's not very sustainable and will kind of get commoditized down, but maybe not.
Yeah, that's a really good point. And that is where a lot of this shit starts to get weird. Is that when someone says that they have an interest bearing product for you, let's just say get rid of crypto, right? So it's like, I got some bonds, they're like, I don't know, corporate bonds or something, and they're going to pay you interest each year. And you're like, great, what's the interest? And like 6% a year. So you're like, all right, that's a number that I find plausible. I'm sort of like, is that better or worse than putting in the stock market? I don't know, maybe it's a little worse, a little safer, or whatever. Anything between 1 and 15% a year is sort of like normal land, and crypto interest rates are higher. There are a lot of ways to think about this, but just generally, crypto interest rates are 20% a year roughly. So in crypto, you have something that pays 20% a year, and that's actually kind of reasonable. You know, there are a lot of people who pay 20% a year for capital. There are a lot of people who loan capital at 20% a year, whatever. Um, so okay, anywhere between like 5 and 30% is like plausible in crypto. But as you said, some of these are 1,000, and 1,000 is the equivalent. Like it's just like that's a ridiculous number, right? Like no one ever pays you 1,000% a year, right? And why is that? Well, first of all, everyone would do it. Also, why are they paying you so much money? Where's it coming from? Like this is way too much. Like you could have said 100, and I would have been amazed at it. Like 1,000, like that's ridiculous. So sort of your thoughts, like this has to be a scam. Like this is the like send 1 Bitcoin to us and we'll send you 2 back type scam, right? Um, and and what's actually happening there is, well, mechanically, what happened was, yeah, they're airdropping the tokens on the users, and you just do the math. They're like giving away half of all their protocol tokens the next 2 weeks, and that's $250 million worth of tokens are given away. And there's optimistically going to be $1 billion locked in this protocol using it. So then you have 25% over a couple weeks. That's where you get these insane numbers from. And there are sort of a few ways of thinking about this. The optimistic way is like, yeah, time horizons are shrinking. They want their protocol to do well soon. So they're like, we're not going to give it to the next, pass out these tokens over the next 2 years. Let's just do it over the next 2 weeks. Why wait? So yeah, it's a ton of yield for 2 weeks. We're giving away most of the value of the protocols to users, and that's the trade we're making in return for getting a lot of users. And it's still a little weird because people should be putting a shit ton of money in. Like that should be drawing $100 billion out to make the return more reasonable, right? Like, that's sort of the optimistic take. The pessimistic take is like, it's a scam, or it's not really 1,000% a year. And what does that mean? Well, here's an easy way to give it an insane yield. You just take a token, and every day you double the number of tokens. You just mint another entire new set of them and airdrop it on the current token holders. So yeah, you're given 100% a day, but obviously the price is crashing. Like it's just a hyperinflating token. You're not actually giving out value there. And so another thing that might be happening is that the token's price is actually crashing just as fast as it's paying yield. So you don't make money for doing this. Or maybe it's a scam. They're going to steal all your money somehow. And so those are sort of the pessimistic takes.
Are these just like the new ICOs?
Yeah, I mean, they're not exactly the new ICOs. Like, I mean, there's differences, and everyone will come up with like their own, sort of reasons for why they're different. And
not structurally, but just in the sense of using a new mechanism for capital markets and incentives and kind of acquiring users. ICOs was one version. This seems just like a second version, and that's not passing judgment on good or bad. It just is what it is,
right? And I think in the end, my answer to you is closer to yes than no. Mm-hmm. My answer is sort of like, yeah, these kind of are the new ICOs. Like that's actually not a bad way to think about it. And whatever, there's a lot else going on there. Obviously, like it's not that, but yeah, at its heart, these bear a lot of resemblances to ICOs.
And it also feels like there's this game going on. Like in my opinion, there's people who I'm probably closer with that would say, Bitcoin is the only thing, nothing else matters. All this other stuff is, frankly, garbage, right, and like, whatever. What I think is interesting, though, is if you say, okay, like that is one view of the world and probably more right than wrong in terms of Bitcoin having immense value kind of moving forward. But there's also this like kind of thought process of, wait a second, there's a whole bunch of financial engineering and craziness going on here. If you're a pure capitalist and you say, I have no emotional connection whatsoever to any asset, you can make a lot of money, right, and drive a lot of returns. Yeah. So if you almost come at it like from a hedge fund perspective, where a hedge fund says, I don't care what the asset is, all numbers on the screen, and basically I'm just looking for things I can buy low that go up and then I can sell higher and make a return. That seems to be the people who are thriving in this environment.
Yeah. And, there's sort of, I know I've retweeted this a number of times, although it's not actually my quote. It's a group CMS. It's a cool firm who coined this. But, sort of, do you want to be right or do you want to make money? And like, there's sort of this thought of like, all right, you can use your words, you can say whatever you want, you know, and I'll be here making money because I'm going to go yield farm and you're not going to yield farm. And like, we'll see who wins. I don't know what winning means, but I've guessed about who's going to end up with more money. That's sort of like maybe what you're getting at there, which is like, put aside all the like moralizing and all the philosophical aspects of it and the projections, and just say like, can you make money yield farming? The answer is yes, you can make money yield farming. You make a lot. You don't have to lose a lot. I mean, if you just yield farm scams, then you're just going to lose all your money. And um, if you don't understand that tokens can crash and that their prices can move, even if they're not scams, then you're going to end up yield farming in all the pools that are probably going to crash. So it's not like you can only make money doing it, but were ways that were actually just not that risky.
And so how much money can be put to work in these strategies, right? There's a lot of people who, kind of come from
Right.
the traditional Wall Street world and they say, hey, if I can't put, $50 million into the trade, then it doesn't
Yep.
matter, or hundreds of millions of dollars. My understanding is you can't do that, but you also can do more than, $10,000. And so kind of talk through your experience with how much capital can actually go into some of these trades.
Yeah, it's a really interesting question. And it's really different for some of them than others. You find a new project that has sort of nothing in it. And like if you put in $1 million, you'll double the total amount of money in it. You'll have all the returns and no one's going to be there to buy the tokens you're farming. So some of them, the answer is you can put 10,000 in. And if you do a whole lot more than that, you're just killing your return. Like there's, um, others, different ones are different sizes. Um, and sort of what you should be thinking is a combination of two things. First, um, how much yield in dollars is being handed out? Not in percent, but in dollars, right? If someone's handing out $1 million total of yield ever, there's just a limit to how big you can do that trade, right? If other people are doing it too, you're all fighting over that. Like, you're not going to have $1 trillion at work trying to do that. If someone's giving out $1 billion of yield, I mean, it's worth tying up a lot of capital to get that. The other way to think about it is just like, how big is the world doing this? How much impact will I have doing it? How much liquidity will there be in this token everyone's mining? Can I sell it? Not that you necessarily will sell it, but can you sell it is sort of the ultimate truth of like, is it real money, right? If you're getting all this yield, but you can't sell the yield, it's sort of a sign maybe the yield's fake. But if you could sell it, then even if you don't, maybe it's kind of real. Um, and so anyway, to answer your question, on the low side, almost none for some of these. On the high side, well, you can sort of look at the numbers, and there's a lot of different numbers you can look at. One of them, right, you can look at the SushiSwap migration and how many funds moved with it, how many funds it grew to, how many moved back. It's not clear exactly what the right number to use, but they're all in the same order of magnitude. You can look at how many funds got locked up in Compound at its peak when it was like the only one doing this. You can look at how much is in Curve. I mean, there's a lot of versions of this if you look at the biggest ones out there. And the number's about $1 billion. That's about how big the world can do this. Probably more, probably a few $1 billion worth of funds. And it sort of has to be that big because there's been like $1 billion handed out. And if you could have gotten all of that for like $100 million, that's like a ridiculously good trade. I mean, there's a lot of ridiculously good trades, but 10xing in a month is pretty good. And so then you say, okay, but you couldn't actually put that much at work, right? Like, come on. No, I don't know. I think kind of you could. It's
Really?
big. It's really big. It's now again not everything, right? Like only a few of these pools have
So, so
enough.
you, you described like, okay, there's some that you could put $10,000 from what you've
Right,
seen, like, and you don't have to use names, but just like,
right.
what's the biggest single opportunity from a size standpoint you've seen?
Yeah, single pool $1 billion. Um, that's about the biggest they've gotten. If you look at how much DAI was being, you had many hundreds of millions of DAI in Compound at one point. You had hundreds of millions of dollars of BAT in Compound at one point. Um, you had, you've had $1 billion in SushiSwap. You've had $1 billion in Curve. Um, Balancer had hundreds of millions of dollars yield farming. Um, Yeah, I think like a billion's about as big as the biggest single pool has gotten. Now, obviously, if you put another billion in there, you're crushing the market. But I, you know, if the question is like, could you put $50 million to work yield farming? Yeah, the answer is yes, you could.
Okay. You're saying that with a smirk on your face, so I won't ask any questions. um, but let's talk about SushiSwap. Uh,
Yeah.
Absolutely, like this to me is like the epitome of just chaos in crypto,
Oh yeah.
in every positive way and every negative way
Yep.
combined in one thing. Tell us kind of just your perspective of what's played out so far.
Oh, it's been a fucking soap opera. I mean, it's insane. It's I mean, I thought that I'd seen some insane things, but this is so much weirder. Um, so yeah, it was one of the yield farming pools. They did their yield farming on Uniswap, and I think they kind of did two things that other yield farming didn't do. Um, One thing is they chose a really good thing to yield farm. Um, Most yield farming is not done on Uniswap, which is weird if you think about it, because what product is the most used product in DeFi? Like it's Uniswap.
Hmm.
What product would you guess would be the highest revenue product in DeFi? Well, not Uniswap because it hasn't turned on revenue. But if it turned on revenue, then maybe Uniswap, right? Like exchanges, and it sort of fits. High volume, it's an exchange. Um, and I think it's like an underrated point that like, you know, if you look at what like Curve has maximized the hell out of their position. And they've done an amazing job given what they are. What they are is a stablecoin to stablecoin liquidity pool. That's like not an incredibly high grossing field in crypto in general, right? Like, they've done amazingly given that that's sort of like what they've done so far. But all right, so first of all, yield farming Uniswap, yeah, okay, that seems like enticing. And the second thing that they did was they had this cool idea. Well, some people think it's blasphemous, some people think it's awesome, whatever. It's whatever you think. It's potentially powerful, which is, um, well, if your goal is to incentivize usage and to kind of get a user base and grow it out, what easier place to do that than on a current version of the product? So what it did was it started out not by building SushiSwap the exchange, but by just having people farm sushi by using Uniswap. And sort of the natural crowd then to give sushi to, and then to fork and create SushiSwap, another DEX. Um, so it made a few interesting decisions that I think like were powerful, if nothing else. And it gained in popularity, and it became like the biggest yield farming thing. One of the biggest by returns, but the biggest by prominence I think that there's ever been. Um,
How
and
much is
sushi
that
was
is how much of that is driven by the meme and like the name and kind of the like Twitter, meme
right.
and GIF lords taking over and really pushing it?
Well, certainly some of it is. Like that was definitely a driving factor, but I don't think it was the only thing. I think it took off because it had a really good medium to grow on, which is like, you know, something trying to become one of the preeminent dexes. Um, and if DeFi is booming, probably dexes should be. It's actually surprisingly few of them. Um, it's you can kind of think about what you think sushi should be worth. I don't fucking know, but like you come up with a big number if you make the right assumptions. It's like it's not it's not like it's obviously just a dead coin eventually. Um, sort of backing a real product and type of product that has potentially high upside. So it had a good substrate to grow on, but then also had great memes. Not the best memes. I think Based has better memes, but good memes. Got
Good
sort of
memes are good enough.
a solid A minus on the memes. Um, to go with like a solid A on the product, and so okay, sure. As far as food coins go, that's way ahead of the curve. Like the curve is like B and D minus respectively. So like A minus and A is really good. And okay, so it got huge. Sushi was huge. Sushi was like one of the most traded coins in the world. I second most, maybe caught up to Ethereum one day. I don't know, he's like right around Ethereum level. And ran up a lot. And whatever, it's huge. And everything was I don't know if humming along is quite the right word. It's like a sort of massive, like volatile, uh, uncertain kind of clunky thing, but it is big and growing. And then and I sort of was on the outskirts of it in that FTX listed it. It listed sushi, um, and Alameda farmed some sushi, um, and then it was about to have the Great Migration, which is like this point at which I SushiSwap the exchange, the DEX was going to become a thing. It was going to fork off from Uniswap and try and migrate people's liquidity from Uniswap to SushiSwap. And like a day and a half before that, Nomi, the face behind the project and one of the founding developers, I took the treasury, and that was not well received.
And took the treasury, for those that don't know, means that all of the money that was sitting there was converted into ETH and like took it personally.
Right.
Right.
And to be clear, it's not like the user funds that were there. It was the and it's this thing that doesn't exist so much in centralized finance, but it's sort of the project treasury, like the funds to be spent growing the project out, So it's not like they stole all the users' money. That would be like really bad.
Yeah, it basically was the idea of what was being airdropped was coming out of a bank account, right? And they took a bank account. So it was not something that users had given them. It was something that they kind of had created, but it had value. It ended up being, like $13 million or something.
Yeah, that's right.
And was not well received.
That's right. It was very not well received. And the world realized, shockingly, right? The world realized a lot of things at the same time. The first was, oh shit. The second was, oh, we probably should have had a more in-depth conversation about what the purpose of this. It was the dev fund, the treasury, like sort of pool of stuff to grow the platform, what it was and whose it was, and maybe we should have rushed to get a multi-sig control if it was just Nomi's sig. But also maybe rather than rushing to, at least we should have like clarified the ground rules for it. No, there have been some sort of informal verification of rough ground rules, and it is not exactly adhering to them. Like this was not what anyone had thought was sort of going to happen or communicated at all. And so it was, sushi crashed hard. The market crashed hard. And the community was furious. Nomi seemed a little confused. I think, like, certainly reading Nomi's Twitter, like, if you take it at face value, like, they were not expecting the backlash that they got. I think they should have been expecting, but they were not. And SushiSwap was sort of like nearly dead. And it's weird, like sort of, it all kept going on as it had before, except the token had crashed and everyone had lost their confidence in the founder and the project, and there's no more treasury. So okay, not great. And it was like, it's sort of amazing that there hadn't been huge like rug pulls or thefts in DeFi so far, that like none of these platforms had lost $1 billion in them. But still, 14 million, that's not, that's real money there. And and that was, it sort of, Sushi went from the hottest project in crypto to toxic in, an hour.
All right. So when all this happens, I was not paying a lot of attention. Then all of a sudden, when it started to like really, really go up, people started tweeting it at me. So I kind of spent my obligatory 20 minutes Googling. Okay, I kind of sort of understand it just enough to know what bucket to put it in mentally, but didn't really go deep on it. And then all of a sudden, when the treasury was taken, literally my feed was just filled with anger, hate, laughing. I mean, just every emotion in the world coming from different people. The "I told you so" crowd, the "somebody stole my money because I don't understand what actually happened" crowd, the the token went down.
Yeah.
I mean, just everything. And so I was like, okay, that's probably not a good development for a lot of
Nope.
people. And then I don't know, 24 hours later, somebody tweets at me and says, "Hey, it's been transferred as a
Right.
project to you." And I was like, "Wait, what is going on?" So, kind of, how did that happen, and what exactly happened? I guess.
Yeah. That was pretty fucking wild. So, um, yeah, I was. I mean, I, like many people, were not excited about the developments with the Treasury. I think I was like a little more sympathetic than some people were, just in that I thought that there was legitimate ambiguity about what had been intended. Not that I thought this was an appropriate use of them, but that I also sort of felt like legitimately, like, people didn't quite nail down what the plan was for it. And also that, like, Nomi seemed legitimately not to think that this was going to be perceived the way it was. Like, there seemed to be a real, like, this wasn't sort of like him saying lullaby. There's like a real disconnect here. Um, but also sort of destroyed the project, and also was the wrong thing to do. And like, it was also not selfishly the right thing to do. I mean, it's made everyone worse off. It's bad for everyone. Like, and the honest truth is, if like he had never done that, and he just like worked really hard for the project and made it be a great thing, and then eventually was sort of like, "Hey guys, like I think that, like, I should get a percent of the tokens." And I think people would have been like, "Yeah, that sounds right. That sounds like you deserve that." And could have ended up with more than they did. So,
So, how does it get transferred to you?
yeah. So I wrote some tweet threads expressing my displeasure, um basically saying, like, you got to fucking transfer control of this project or it's just dead. Like, no one is gonna have faith in it with you with the keys. Like, sort of like, and anyway, I sort of like, that sucks. Like, that's sort of it for sushi. And I don't know, took a nap, and I was like on a beanbag by my desk, and sort of just shouted out, like, "Hey, someone just tweeted that Nomi said he was going to give you the keys." And it's a weird moment. But I don't know. I kind of got up and bolted to my computer, and in fact, someone had tweeted a screenshot of Nomi saying he was going to give me the keys to the Treasury. So that's pretty weird. And I mean, it was like kind of like an even more bizarre twist than the previous twist of him having taken, like it's sort of like, was like a really strong negative twist, and then an even weirder positive twist. But yeah, I mean, I don't know. He then did it. Like, he sort of sent the keys to the Treasury, and um and that sort of changed my weekend plans. I mean, whatever I had thought I was going to do, it wasn't figure out how to do a sushi migration. But remember, the migration hadn't happened yet. Like, that still had to happen, and it was actually kind of a tricky, intricate process. And I mean, I hadn't written sushi swap or anything. It's sort of like, so all of a sudden it's like, okay, like, I guess what's happening this weekend is that we're gonna go figure out how SushiSwap works.
So you still have control, right?
So we have, so the key was passed, and it's sort of like technological control over some parts of it, although as sort of dictated by votes of community members. But that control is transferring to multi-sig control.
Okay.
Sort of step one, and that transference is happening maybe tonight. We have everyone's address now, and last I checked in, we're preparing it. So that's going to be sort of the next step for the next step for SushiSwap in sort of formally removing me of control, which is sort of important to it because it's not SamSwap, and it's not I'm not meant to run it. I don't run it. I don't like. It's sort of like the keys were dropped on me, but that's not. It's meant to be the community's project, and so.
So you have no plans. This is not going to become the next product line of Alameda is to go and.
No, this is not, and it sort of can't be because that's not like it would involve fundamentally changing what SushiSwap is. Like that's if I like at some point Serum might create it or FTX or something might create name a DEX, something like that. But as Serum did create a DEX, but SushiSwap sort of dropped on my lap, and I want to be sort of faithful to like what it was meant to be and what people thought it was meant to be when they got involved in it.
Got it. That makes sense. And so let's zoom out for a second. You have your hands in Alameda, FTX, the whole SushiSwap saga. You kind of have a front row seat to a lot of things that are going on here. Just so people understand kind of where you see opportunity, maybe just talk through like on a percentage basis of your time and mental energy, how much of it is on the exchange, how much of it is on trading, how much of it is on like the DeFi world. Just how do you kind of think through maybe the prioritization of these different things, and I'll use your time almost as like a proxy for of kind of focus and energy.
Yeah. So basically, it varies, right? Like a week and a half ago, the answer was 0% on sushi. That's not a thing. And in a week, it's going to be not 0% on it, but
very little,
very very little. It's like, so that's sort of like a little bit of a what's the word, like a sort of a weird
outlier.
Yeah, a weird musical interlude in the middle of but I've been spending most of my time on Serum and FTX, and so on the doing sort of a combination of management and product vision and things like that, and also a lot of low level stuff. I mean, sort of like a tricky support ticket comes in, and like it's sort of not clear what's going on exactly. I'll often take it, and so I would say, recently it's been majority on Serum, some on FTX, and then just sort of general oversight of Alameda, but not a ton of day-to-day intervention.
Got it. Where can people find you on the internet and find out more about FTX or Alameda?
Yeah, so I've decided that a good, as someone with recently one too many projects on their plate, a good use of my time is shit posting on Twitter. So that's where you can find me. I'm SBF_Alameda on Twitter, and I'm tweeting way too much.
It's okay.
So that's the easiest way to find me. And then FTX is at ftx.com. Serum, if you go to projectserum.com, you'll find a helpful website with a bunch of links to stuff.
Got it. I end the podcast with the same two questions for everybody, and then you get to ask me one to end it. The first is, what's the most important book you've ever read?
Oh, boy. I mean, I can be honest, like, I don't really read books anymore. I mean, I think like I like fantasy books growing up, but they're really long, and I mean, I think that I don't have that long of an attention span, but even more than that, I think like the world has sort of decided that like there are more efficient ways to convey things often, and I sort of agree. So I guess I'll say rather than that, maybe some blogs that I like,
Okay.
Which are there's money stuff. So Matt Levine's blog, if you like reading
Fantastic.
about finance, it's the best. I mean, it's just it's, in addition to being super helpful and useful, it's completely bizarre and has like wonderful anecdotes. And I think that's probably probably my favorite, regular blog. And then I also like a lot of the 80,000 hours, if you're into effective altruism, has a lot of good pieces coming out about what you can do with your life. And yeah, and outside of that, I sort of like shit post on Twitter and stuff. But in terms of media, I think it's pretty much that sports and Netflix. So,
second question, it's more fun. Aliens, believer or non-believer?
Oh God, I mean, it's like I certainly would not assign 100 or 0% probability to it. Although some calculations will give you 100%. Sort of, I would not say like I don't know how to think about this one exactly, and I definitely get like contradictory answers. Like one way to think of this is you just sort of like are like you serve any reasonable model and then multiply by the number of planets, and you get that they definitely exist. Like there's no chance they don't. And then you sort of take a step back and you're like, okay, but we've looked at a lot of planets and none of them have it. Like you're saying that any reasonable model would have assigned effectively 0 probability to what we've seen, and then you say no, it's like there are these reasons that makes sense. I have not thought hard enough about this to reconcile it. I will say that I would say more likely than not that there is something, although that something might be like seaweed, or a variant on it, or more likely something maybe even less like it. But I don't know, I would say more than 50% chance that there's some life on some other planet, although probably less than 50% that it's like us.
I think that's a fair answer. You could ask me one question to end this. What do you got for me?
Yeah, which coin have you most regretted buying, and which coin have you been most proud to have bought?
Bitcoin by far, in terms of kind of most proud. I guess the emotion of proud. I don't know if I necessarily think of that as like a
right.
Hey, I made this financial decision.
Accomplishment, right?
Yeah, but Bitcoin would be the positive answer there.
Yep.
Early on, in like I don't know, 2017. I actually don't even remember. Like, I never really kind of waded into like what I'll call the crevices of crypto, that the super illiquid stuff. But when Ether went from like 10 to 30 to like 100 in the spring of 17, I just didn't really have nearly as much education and knowledge and like thesis and conviction and all the things that like now I think if you were to talk to me and say like, why do you believe what you believe, I couldn't have articulated any of it right then. And to be honest, there was probably things that like I bought and it was never big amounts, but it was just like I was more like buying it because everything was going up. I kind of feel like it's like stock investors today, right? Like you just put money in anything and it goes up.
The index,
and so that was short lived. But that's probably the answer. It's just like there was all kinds of.
It's like a coin whose name you can maybe not even remember now. Like
and it's like dumb stuff, right? It's like, Bitcoin's worth $2,000, so like this other one's worth $300. Like, are they going to go? Is it going to go to 2,000? So it's just super unscientific, more entertainment than investing, frankly. But that's probably it. All right, Sam, listen, thank you so much for doing this. This is absolutely fantastic. I think people will love this. And
thank you.
You've built some amazing businesses in the space. So please keep going, and we'll have to do it again in the future.
Absolutely.